Good morning. As the sun rises over New York City, the financial world is waking up to a day filled with anticipation and uncertainty. The energy in the air is noticeably different from the exuberance of the past week. Today, January 8, 2026, Wall Street opens with a sense of caution. The iconic streets of the financial district are quieter than usual, as traders and investors brace themselves for what could be a defining day in the markets. U.S. stock futures are dipping slightly after a streak of record highs, signaling the market is pausing to assess what's next. The euphoria of recent gains has given way to a more measured approach, as participants weigh the risks and rewards of the current environment. The Dow, S&P 500, and Nasdaq futures are all down modestly, reflecting a more reserved stance from traders. The usual buzz on the trading floor is replaced by a sense of watchfulness, as everyone waits for the next big signal. Investors are focused on upcoming jobs data, which could shape expectations for the economy and interest rates. The employment numbers are seen as a crucial indicator, not just for Wall Street, but for the broader economic outlook. This pullback isn't panic, it's profit-taking and prudence after a strong run. Many investors are choosing to lock in gains, while others are simply waiting for more clarity before making their next move. The market is in a holding pattern, shifting from celebrating gains to anticipating new economic signals. The mood is one of cautious optimism, with a hint of nervousness as everyone tries to read the tea leaves. The jobs report due soon will be pivotal, influencing both investor sentiment and Federal Reserve decisions. A strong report could reinforce confidence in the economy, while a weak one might spark concerns about growth and future policy moves. The Federal Reserve is closely monitoring these numbers as well, as they weigh their next steps on interest rates. Any surprises in the data could shift expectations for rate cuts or hikes, adding another layer of complexity to today's trading. As the day begins, all eyes are on the numbers that could set the tone for weeks ahead. The decisions made in the next few hours may ripple through global markets, affecting everything from stocks and bonds to currencies and commodities. The excitement of recent highs has given way to careful analysis. Teams of analysts are poring over data, looking for any hint of what the future might hold, while portfolio managers weigh the risks of staying aggressive versus playing it safe. What happens next depends on the employment data about to be released. The countdown to the report is almost over, and the tension is palpable in offices and trading rooms across the city. It's a pivotal moment for Wall Street. As the world watches, the decisions and reactions of today will help shape the financial landscape for the days and weeks to come. Yesterday's trading session was a study in contrasts. The S&P 500 and Dow hit new highs but closed slightly lower, as late-day weakness in financials and energy dragged the market down. Financial stocks struggled, and energy was pressured by oil price swings. This sector-specific downturn offset gains elsewhere, showing the market's complexity. The day ended with a tug-of-war between profit-takers and buyers, with sellers edging out. This mixed performance sets the stage for today's cautious mood. Investors are watching for broader economic data to clarify the path forward. While most sectors faltered, technology stocks surged yesterday. The Nasdaq Composite closed higher, powered by giants like Nvidia and Alphabet. These tech leaders lifted the entire index, highlighting their outsized influence. The market is increasingly split. Tech thrives on innovation and growth, while traditional sectors react to economic shifts. This divide means tech's strength can buoy the market, but also raises concerns about concentration risk. Investors are watching these giants closely, as their moves shape the broader market. Yesterday's tech rally was a bright spot amid mixed signals. The market's complexity is on full display. Let's look at the latest job market data. The numbers we see today are more than just figures. They tell a story about the economy's health and direction. Each data point, from employment rates to wage growth, provides a piece of the larger puzzle. The ADP report showed private sector hiring in December was weaker than expected, hinting at a cooling labor market. This slowdown in hiring could be a sign that businesses are becoming more cautious amid economic uncertainties. This moderation could help ease inflation concerns, aligning with the Federal Reserve's hopes for a soft landing. A soft landing refers to a scenario where the economy slows down just enough to curb inflation without triggering a recession. Today brings more data, weekly jobless claims, and the Challenger Job Cuts report, offering a real-time snapshot of employment trends. These reports are crucial as they provide immediate insights into the job market's current state. But the main event is tomorrow's official non-farm payrolls report, the most comprehensive look at jobs, unemployment, and wage growth. This report is eagerly anticipated by economists, policymakers, and investors alike. The softer ADP numbers have set expectations for a moderate jobs report. Analysts are now adjusting their forecasts, considering the potential implications for future economic policies. How that data comes in will drive market sentiment and Fed policy. The Federal Reserve closely monitors these numbers to make informed decisions about interest rates and other monetary policies. Investors are bracing for a pivotal update. The job market data can significantly impact stock prices, bond yields, and overall market confidence. The labor market's direction is key to the economic outlook. A strong job market can boost consumer spending and economic growth, while a weak one can signal trouble ahead. All eyes are on tomorrow's numbers. The anticipation is palpable as everyone waits to see if the data will confirm or challenge current economic forecasts. The stakes couldn't be higher. The upcoming data release could set the tone for the markets and the economy in the months ahead. The jobs data feeds directly into the Federal Reserve's next move. The big question: when will the Fed start cutting interest rates? A cooling job market gives the Fed more flexibility to lower rates without stoking inflation. If tomorrow's jobs report confirms a slowdown, markets may expect rate cuts sooner in 2026. Lower rates boost stocks by making borrowing cheaper and increasing their appeal over bonds. The Fed is balancing healthy employment with inflation risks. Every economic report is scrutinized for clues. The central bank's next steps hinge on these numbers. The stakes are high for markets and the economy. Turning to global news, Venezuela is making headlines after the reported capture of President Nicolas Maduro by the U.S. This unexpected development has sent shockwaves through the international community, raising questions about the future of Venezuela's leadership and its vast natural resources. This dramatic event could reshape international relations and the global energy market. Analysts are already speculating on how this could alter alliances and economic strategies, particularly among countries heavily reliant on Venezuelan oil. Venezuela holds vast oil reserves, and any leadership change could impact global supply. The country's oil industry is a critical component of the global energy market, and shifts in control could lead to significant changes in oil prices worldwide. The U.S. plans to control Venezuelan oil, with President Trump announcing a transfer of up to 50 million barrels to Washington. This move is seen as a strategic effort to stabilize the U.S. energy supply and exert influence over global oil markets. This move could inject significant new supply into the market, affecting prices. Experts believe that this influx of oil could lead to a temporary decrease in global oil prices, but the long-term effects remain uncertain. So far, markets are calm, but the long-term impact is uncertain. Investors are cautiously optimistic, but the situation is fluid, and any new developments could quickly change market dynamics. Geopolitical events like this can trigger volatility, especially in energy. The energy sector is particularly sensitive to political instability, and traders are closely monitoring the situation for any signs of disruption. The situation remains fluid, with oil as the key variable. As the world watches, the future of Venezuela's oil industry hangs in the balance, and the global market is bracing for potential shifts. Investors are watching Venezuela closely for ripple effects. The outcome of this situation could have far-reaching consequences, not just for Venezuela, but for the global economy as a whole. Oil prices are swinging as Venezuela's news collides with other global forces. After 2 days of declines, Brent and WTI crude both rebounded over 1% this morning. A bigger-than-expected drop in U.S. oil inventories and ongoing Russia-Ukraine tensions are supporting prices. But the prospect of increased Venezuelan supply, if the U.S. stabilizes production, is weighing on the market. The result: a tug-of-war between bullish demand and bearish supply fears. Oil prices are caught in the middle, reacting to every headline. The market is searching for balance. The direction of oil will depend on which force, demand or supply, wins out. For now, volatility is the only certainty. Energy traders are on high alert. President Trump's new policy proposals are shaking up markets. He's targeting the housing market by proposing a ban on institutional investors buying single-family homes, aiming to help families compete. This could cool home prices, but disrupt real estate and rental companies. In defense, Trump wants to ban dividends and buybacks for contractors, while boosting defense spending by 50% to $1.5 trillion by 2027. These moves could reshape the defense sector, but face major hurdles in Congress. Investors are waiting to see if these bold ideas become law. The legislative process will determine their real impact. For now, markets are in wait-and-see mode. Policy uncertainty is adding to market volatility. As we wrap up, the market faces a critical stretch. Tomorrow's jobs report will set the tone for interest rates and economic outlook. Meanwhile, Congress and the Supreme Court are weighing major policy and legal decisions, including tariffs and Trump's proposals. The outcome of these events will create winners and losers across sectors. After record gains, uncertainty is now the dominant theme. Investors are watching for clarity on jobs, policy, and trade. The next few days will shape the market's direction. Stay tuned, big moves are ahead.